Good evening, Patriots. The old man here, December 13th, 2024, happens to be Friday the 13th, for anybody that's superstitious. Well, first of all, I'll let you know that over the last couple of days, especially yesterday, super busy. I was pulled in about 1,000 different directions, but finally sat down to record a video last night about 10 o'clock. Got about 10, 12 minutes in. And my phone stopped recording because the memory is full again. I guess technology can kick my ass once in a while. I completely forgot about emptying out the storage with the videos I'd been recording. It filled up pretty fast. So it was late. My brain wasn't functioning very well, although I thought the video was going pretty well. And I just went to bed. Thought, well, I'll record something in the morning. In the morning, I got up early. Worked on getting rid of the crap in my memory. Then I realized that I got to go and figure out how to get rid of, get it out of the junk files. By the time I got all that done, got my chores done, it was time to go to work. So this morning didn't happen either. Well, no excuses, just letting you know what happened. So expanding on that last video, where I left off is basically gold needs to be your base. Whatever that is, a certain percentage. Most of your talking heads, whether that be on CDNN or whatever, CBS, whatever, or the guys in YouTube, a lot of them guys are going to tell you, you need your stocks, you need your bonds, whatever ratio that is. Well, as this, let's say, series of my theory goes on, or thesis goes on, I'll kind of explain why none of that works for me. Some will talk about housing, some will talk about the stock market, the bond market. You need to have X percentage in each of your portfolio. You need to have your money in so much of each, a percentage of each in each department. And honestly, at least at this time, that's not going to work. I don't believe. I think gold and silver is the safe play. I think right now, like I was saying the other night, a lot of your smart money's pulling out. They claim that the reason gold is going up the way it is because of the central banks, and that's partially true. But even then, if you look at some of their balance sheets, you'll see that they've got a lot of these banks, even after buying records amounts of gold, they've only got 15 to 20%, at the most, 15 to 20% of their portfolio is in gold. So it's a pretty low percentage. And there's a hell of a lot of gold out there, and they still don't know really how much gold. They claim they do, but honestly, I don't think they do. So much of it's been used in jewelry and over the years, and jewelry tends to be kept through generations a lot of times, So I think there's a lot of gold out there they don't even realize that's out there. So, they're just thinking that, like I say, stocks and bonds is the only way to go. Stocks, bonds, housing, apartments, whatever, is the only way to go, and you need to have a certain percentage in your portfolio. My thought process is right now, at least with what I see, there are a lot of people argue with me and say I'm wrong, and that's fine. It doesn't really matter to me. This is what works for me. First of all, let's talk about housing. Well, number one, We've been told all of our lives that, a house is a good savings plan. You can buy a house at a cheap price, and it's worth so much more 30, 40 years later in your retirement. And maybe you take the house you've raised the kids in, and whatever, it's too big for you. So you downsize into a smaller house, you take the proceeds, and you live off the proceeds the rest of your life. Well, in today's world, especially with inflation the way it is, that's not going to work. You're going to run out of money in a few years, unless you don't plan on, if you plan on retiring and dying in a few years, I don't know, maybe that'll work for you. But the reality of it is that, much like everything else, is your house 30 years later worth more, or is the dollar worth less? So let's say, I'll give you an example. Back in '84, I bought a house for $48,500, a nice little ranch house, just shy of 1,000 square feet. The wife and I, at the time, we didn't have any kids. And she wasn't able to have kids, so we didn't need to buy a bigger house or figure we were going to buy this house and then move into something bigger later. We bought that house figuring we'd be there a good long time. And, we fix the house up, you keep the house up, you put quite a bit of money in it over the years, you pay taxes on it over the years, you pay a lot of interest on it over the years. And at the end of the day, it's worth, let's say she could probably sell that house now for $150,000+. Well, that house is built in '55. We've owned it, we're divorced now, but she owned it since, her and I owned it together since '84, and I've been divorced 10, 12 years from her. But now that, so that's a good number of years. And now that house, let's say, is worth $150,000. I think she could get at least that. And again, that house is built in '55. Is the house worth more? Does it have more value, I should say? Does the house have more value, or does it just cost more? It takes more dollars to make that trade. If you want to buy that house today, it's going to take, let's say, $150,000 instead of $48,500. Okay. Again, I don't think that was a good investment if you look back. A lot of people say it will because the numbers went up. Okay, that's all they look at is the dollars went up. Well, let me tell you this. First of all, we took out a 25-year loan. I think it was a 25-year. Yeah, I believe it was a 25-year loan on that house. We worked hard. We refinanced it at a lower interest rate. When we first took that house loan out, it was 10%. Interest rates dropped quite a bit. At one point, I don't remember what they were, but we refinanced, but not to borrow more money or anything like that, or get lower interest payments or lower house payments. What we actually did is we took it, when we refinanced it, we took it down to at that time, we probably owed 15 years yet. We took it down to about a 10-year loan, and we actually increased the payments to pay it off faster. All in, I think we were under 15 years when we paid it off, and that's starting out with a 25-year loan and paid it off in less than 15 years. But even with that being said, normally, and I don't think most people know this, and I sure as hell didn't when I bought the house, I'll tell you that, until I started, down the road far enough, maybe 2, 3, 4 years later, I realized, holy shit, we ain't getting nowhere. But I don't think most people know that for the first 10 years of paying back a house loan, 11 out of 12 payments go towards the interest and not the principal. So after 10 years of paying on that house, not paying any extra, nothing like that, and forget about the fact I refinanced, forget about that at the moment, but after 10 years of paying just a standard house payment, I would have only made 10 principal payments. That's it. Out of all those years, so that's 120 months. Okay, 12 months in a year, 10 years, 120 months. 10 payments went toward the principal, the rest was interest. Does that sound like a good trade? Does that sound like a good deal? Does that sound like you're getting anywhere? I don't think so. Okay, but yet we were sold a bill of goods, just like everybody else, that a house was a good investment. I didn't want to pay rent or whatever. I know you got to have a roof over your head, but I just want you to question the fact that, is this such a good deal, or is there something we could do different? I'm not sure exactly what that is yet, and I'm still working on that in my head. But honestly, that's not a good trade. That shouldn't even be a part of the American dream, is to be in debt for 30 years and, have that house. Not only are you in debt for 30 years, typically nowadays, of paying on that house, but also you're paying taxes on that house for 30 years. That's all it costs. You're paying upkeep on that house for 30 years. That's all it costs. So is that the American dream, being in debt? I call that slavery. There's got to be a better way. I wish I had the answer, but there's got to be a better way. And then they also say that rentals is a good investment. It's cash flow. Everybody talks about cash flow. I don't know about you, but a side gig. Now it's different. If you're going to do, rentals as a full-time income and you're efficient at it, maybe you either got a guy that works pretty reasonable and is really good at repairs and whatever else, and you can get that stuff done pretty cheap, or let's say fair, then, and you're doing it as a full-time job, so you're on top of it, that's fine. Guy could probably make some pretty good money. Although you got to remember, he's also paying taxes. He's paying upkeep. And he's paying interest. So he's got to charge enough above that he makes a profit. But if he gets too high, and generally he'd be lucky to make 5% on his investment, hell, you could loan out money and make better investment, and not have nothing to deal with. But typically, all in, he's lucky to make 5%, even less than that if he's got to hire somebody to do all the repairs, or just pay a manager to do all of his managing. He might be making 2 or 3%. Well, again, if you're making 2 to 3, even 5%. If inflation's 5% and you're making 5%, are you even? Yeah, I think you are. And do you want to do all that work to be even? Don't think so. Doesn't make sense to me. So obviously, or at least to me, rentals don't make any sense, and maybe it does to somebody, maybe it works for somebody. But a lot of somebody's that worked for them 30 years ago, not so much today. The other thing is, during the pandemic, remember that you couldn't evict anybody. So if you had, let's say, 10 rentals and all 10 rentals decided to quit paying, at least until the pandemic was over, there was not a damn thing you could do about it. But did the government want their taxes? Sure did. Did the bank want their money every month? Yep. Did you have to spend money on repairs on those houses? Sure did. If you didn't, they're just in 10 years, you can imagine what kind of damage would happen to a house if you let it go 10 years and you didn't do any repairs at all. So your expenses still kept going out, but you had no income at all coming in. Is that cash flow? Yeah, negative cash flow, or a lot of negative cash flow. So I don't think that works. Well, let's talk about stocks then. The other night I mentioned gold was up 600% since the year 2000. And a lot of guys go charts back way the hell back, and they're telling you how great gold is and blah, 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 or how, some will spin it the other way and say how lousy gold is, whatever. I think most of them charts past the year 2000, and maybe we don't even need to go back that far, but any chart that goes back past 2000, really kind of insignificant in a way, because if the last 20 years, they printed so much money, 10 of those last 20 years at least, you had zero interest rates on the low end or the short end of the curve or short end of the loans. You had really low interest rates, well, 0%. Of course, you can't borrow money at 0%, but you can borrow money pretty damn close to 0%. And so, with all of that, a lot of money flowed into stocks. There was a lot of speculation. Even gold has hit a pretty good hit. Like I said, up 600%. But at the end of the day, like I said about gold, even though the dollar figure's higher, it still roughly has the same value. And if the stock market as a whole, now I'm not saying you couldn't have got lucky and picked a few and made a hell of a lot of money, sure. Good luck. Unless you're a professional, that's probably not going to happen, right? Okay. Or you got to be an accredited investor, meaning you got a net worth of $1 million or more. You got $250,000 to put out in investments, whatever. Then unless you're an accredited investor, you're not going to get the cream of the stock picks. So the rest of us, we get to pick out of let's say the S&P or the NASDAQ or whatever, and at the end of the day, overall, as a whole, that's gone up roughly the same amount as gold. Really? So if stocks has gone up roughly 600%, it's not exactly that. You can look it up. It's close. Kind of like gold is 600%. It's close. It's the roundabout that all that counts. It's to get you in the neighborhood, to get you the idea. So let's say you bought stocks. They've gone up 600% over 20 years. And you bought gold, and it's gone up 600% over the last 20 years, and it's kept its value. Gold has kept its value. Really hasn't gone anywhere, up or down. Really, the dollar figure is higher, but that all means is you've lost purchasing power on the dollar. Well, if they've both basically gone up the same amount, doesn't that mean the stock market's value is unchanged? It's just you're paying more dollars. It takes more dollars to make that trade. Well, let's say today, after 20 years, you've decided, well, now's the time to get out of stock market. I'm going to listen to that old man, and I'm going to buy me some gold and silver now. All right. Might not be a bad idea. You made 600% on that. You're going to pay capital gain tax on that 600%. Now what do you got left? You're paying a hell of a lot of taxes, dude. All right. So in that case, which one's better? I got my physical gold at home. Let's say I started. Now, mind you, I told you the other day, I've only started basically July of 22, July 4th of 22, actually. I started buying my first bits of silver and then gold later. But let's say I started 20 years ago buying physical, not the paper contract, but the physical, and I put that away. somewhere I'm not paying any storage fees or nothing. Let's say I got some here, I got some there, and I got some somewhere else. Just so if one place got robbed, they didn't get it all. Now there you do have a counterparty risk, but I'm willing to take some risk. We get up and get out of bed every day, we take a risk. So I've been stacking gold for 20 years. My neighbor's been stacking the same amount of investment of stocks, and I invested in gold and silver. I'm up 600%. Do I owe anybody any tax? Even if I want to sell it, do I owe any tax? Just saying. If you sell over a certain amount, sure, they're going to report it. There's going to be a form that gets sent to the feds, and the feds might come knocking on your door. But if you got it in your brains, you don't need to sell that much at one time or in one place. And did you pay any tax? I don't think so. But not only that, you're paying the stockbroker 2.5% in the beginning. Now, mind you, you are going to pay a premium on your silver too, or in your gold. You're going to pay at least 2.5%, 3%, 4%, 5% premium on your gold. So I guess in that case, you pay a little bit more premium on gold and silver. But then again, you got it in your own possession, and you've eliminated the counterparty risk. The other thing about it is, the one thing I know is if the stock market goes down, yeah, the dollar trade to gold might also go down, but that should theoretically mean everything's cheaper, and therefore my gold has the same value, going to basically buy the same goods and services. It might be a little lower than normal for a while, but it's going to come right back around, especially when everybody's looking for a safe haven asset to invest in, and that would be physical gold with no counterparty risk. And when I say gold, just assume I mean silver the same. I think silver on a short-term basis is more volatile, and therefore, if you need to sell your silver for whatever reason, you're more likely to take a hit on it. But if it's a long-term hold, I don't see how you can go wrong with either one, actually. Although I would still advise to have your gold as your base, just because you never know, you might have to sell in a hurry for some reason. At least you could sell some of your base that isn't, if there's a dip or whatever, the dip on gold is never as bad as the dip on silver. So, in fact, silver made it to $50 an ounce twice, and over the years, and it still hasn't made it back there again, and that's not even inflation adjusted. That's just the nominal price. We're still not at 50. So that just shows you how much more volatile silver is than gold. And gold's at an all-time high. It keeps setting new highs. She pulls back, but then she gets up again. Again, that's a dollar trade. If sometimes you do have to keep track of the dollars, the dollar trade. And in my opinion, the only time I care is when I'm buying. Other than that, I know it's going to buy the same goods and services, so the dollar trade don't mean nothing to me. So at the end of the day, in the case of stocks, I would think that gold and silver is a much better bet. Much better bet. At the end of the day, I don't have to worry about anybody going bankrupt, a brokerage shutting down, blah, 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 a company, or my stocks. One thing I know, my gold's not going to drop by 95%. I can guarantee you that. Silver, on the other hand, might take a pretty good shit at some time. I don't see that coming in the near future, but it could. It's always possible. But I think the rise would come right back out of the ashes, where gold or the stocks is going to take 40 years to come back. Gold and silver would come back pretty quick, and gold especially would come back quick. So I really think the gold and silver is the better bet. And then as far as bonds is concerned, when things aren't looking good, a lot of times the smart money pulls back off on the sidelines. They sell their stocks. They don't want physical cash because that's too burdensome if you got a bunch of money. Let's say you get $1 million or $5 million or whatever. You don't want a bunch of cash, but you want to get out of the stock markets temporarily. What they typically do, drop back to the bond market, either mostly in short term, maybe 2-year bonds, 5-year bonds, something like that. And they sit back and wait for a correction in the market. And when they think the market's done correcting, they'll sell those bonds into the market and go right back into the stock market, and then ride it back up to the top again. But you got to remember, in 1929, when the stock market crashed, if you bought at the all-time high in 29, it took you 40 plus years to break even. That don't sound like fun to me. Now, I can guarantee you the guy that was holding gold at that point, of which, mind you, it was illegal, but I'm sure people had it. I'll bet you it didn't take him 40 years to break even. I'm sure in a few years he come back around to being even again. You can't go by the value of gold at that time, because the value of gold in 29, it was pegged at 20 an ounce. So it was fixed at $20 an ounce. So, it wasn't the gold didn't really drop. It didn't really raise. It stayed there fixed. So I don't see where that's a good trade. Again, if you buy, you get into the bond market and everybody's coming out to the bond market because the stock market's not looking good. That just drives the interest rates, because the more people, the more demand there is for bonds. And at that time, there would be more demand for bonds. The lower the interest you get on your bonds, because there's so high demand, people are willing to accept less. Well, if your demand gets so high that your interest gets so low, what are you making? What are you getting? 2%, 3% on your bond? I don't know. Ain't a lot. And if inflation's 2, 3, 4, 5%, you're in a hole. Again, that doesn't sound like such a good trade for me. Now, if you're in the stock market and you're sitting back, you're waiting for it to drop, let's say even 25, 30%, and it does, and you buy back in again at a lower rate, and you get a lot more stock for the same dollar value than you had before, seems like a good trade, don't it? But in reality, the stock is a derivative of the dollar. So like I said before, yeah, your stock went up 600%, but that's just the trade. And a dollar that don't buy shit is what you're getting paid back in. Again, doesn't make sense. Nobody's going to take that bond, nobody's going to take that stock on trade, let's say to pay your consumer power bill, but they'd take gold and silver. It might not be legal tender, but I can take that gold and silver right to the bullion, or right to anybody that buys gold and silver, whether that be local coin shop, even gold and silver jewelry dealers will buy it. I mean, they know what the value is, and they can tell real from fakes. So they're going to buy it. You're going to turn that into cash real quick. I mean, in just a matter of not even an hour, I can turn gold or silver into cash, and then cash, I could pay my bill with it. What am I going to do with a stock if nobody wants to buy it? What am I going to do with a stock that's just lost 95% of its value? Nobody wants it. And it has no value, or very little value. So what am I going to do with it? Nothing. So my point is, it's all fake. Anything that pays in dollars is fake. It's part of the fake fiat currency system. Okay? I don't know. So many people think that it's the way to go. And, you know, I've talked to people that say, well, like NVIDIA, it just keeps going up. It keeps going up. How can I go wrong? You know, I can't sell it now. Well, the thing is you don't know when the top is. And if you don't sell it now and you wait and it starts to take a drop, you say, oh, well, it's only 10 or 15%. It'll go back up again. You know, I'll just ride, this is a dip. I'll just ride it back up. And you wait and you wait and you wait. And the next thing you know, it takes another 10 to 15% drop. Well, now you're saying, shit, well, I got to hold on to it. I can't afford to take a 30% loss or a 20% loss or 25% loss. I got to hold on to it. And you ride that bitch right to the bottom. It happens every time. It's part of psychology. You know, you've convinced yourself this is the road. You know, this is your lottery ticket. You're going to get rich off NVIDIA. And I just like picking on NVIDIA. I mean, there's a lot of other stocks that fall in the same category. I'm going to get rich, and you ride that bitch all the way to the bottom. Now, you know, we can talk about Bitcoin, and then the latest thing is XRP. And, you know, I've known enough about both of them to be dangerous. You know, at the end of the day, it might just work out for folks. And again, it might be the thing of the future. I'm not sure. It's really hard to say. At this time, it's not for me. That's the only thing I can say. That either I don't know enough. I'm attempting to know enough, but I still don't know enough. I don't have enough confidence in it that, you know, I'm ready to ride that train. And again, if I did, it would be a very low percentage, maybe 1%, maybe 0.5%, probably more like 0.5% of my overall wealth would I ever invest in something like Bitcoin or XRP, even though, you know, they're talking about it going to the moon. And normally the way to know that anything is at its peak is when you start to see it on mainstream media. And they're talking about it. You know, it's like gold. They're not talking about gold at all. And the reason is the central banks don't want you to know about gold and what kind of a safe haven asset it is. Because if you knew just how good it was, you would ditch the dollar at the first chance you got, and you'd only own gold and silver. In fact, you'd be selling the shit you don't need around your house and buying more gold and silver if you knew how good it was compared to everything else out there. At least that's my opinion. And again, I've said it before, maybe I'm just a crazy old man and they're finally getting the meds right. I don't know. Well, besides, that's an inside joke between me and a buddy. At any rate, that's all I got for tonight. I appreciate you guys sticking with me here. Kind of apologize about missing yesterday, but that was a pretty hectic day and things just didn't come together. I think we got her done good tonight, though. Thank you. I appreciate it if you like, subscribe, and share, and especially leave me some comments. I like to hear from you guys. Good night, Patriots. Bye.